Turn our attention to the Kenyan market and look at the blue chip index on the day, and certainly Safaricom, one of the key movers on that front. You're looking at the market down by almost 0.5%, that blue chip index of 4,844 points. Looking at Safaricom, the stock was up 2.9% on the back of those numbers coming out today. 10 million shares traded in that, and the stock settling at 7 shillings and 10 cents. Just quick check-in on how the currency is faring against the dollar. 83.65 is what we're looking at right now, and certainly shilling strength prevails. Just also some news coming through from Kenya. We're talking about Namibia cutting petrol prices. South Africa saw petrol price decrease recently, and then Kenya also set to cut petrol prices for the second straight month. You're looking at super petrol down by 4 shillings 41 cents to 113 shillings 24, and then diesel also going down by 5 shillings 38 to 101.06. So overall, that good news, of course, if you're looking at the cost of doing business, the cost of transporting goods, and certainly that has been driven by a lower crude price and a stable and strong shilling. On that note, let's get into all things on the markets. Steve Biko, director at Hidalgo Group, joining us from our Kenyan studios. Steve, very quick comment from you on the petrol price cut. Of course, as I said, it's a second straight month where we've seen petrol prices come down. That's certainly good news for companies in Kenya.
It's actually very good news, especially in terms of being able to handle our cost of production, which have actually been out of control. So this is good news for the for the many companies, especially the allied and the manufacturing industry. But also it's a positive step for the government, and it seems to actually finally be working, because now this is the second biggest news this week after the central bank reduced the best lending rate to 8.5, and then now this. It's actually positive news this week for a lot of our companies, and especially the SME industry in this country. So there's affordable access to credit and ease of means of transport and cost of production, especially in terms of transportation. So I'm seeing a lot of headway, and it's going to be, in a nutshell, it's going to be a good month and a good quarter for a lot of companies.
And on the back of that, we've seen the likes of CSC, Stanbic and Equity Bank coming through with cutting the cost of loans to customers. I mean, to what extent are they aligning themselves with where they should be right now? Because rates have been really sticky to the upside, and everyone's saying that they should have cut a lot sooner. So what do you see relative to where rates should be from these recent cuts?
With the stable inflation and the stringent measures that central bank has actually put in place, banks should have actually done this a lot earlier. But it's actually interesting to see how they're going to go, because with the best lending rate of 8.5, a bank like Equity reducing its lending rate from 25% to 20% is still not really any reduction, because it still makes it the most expensive lender in the industry. But for CFC, it's actually making some significant effort by reducing it from 19 to 17, which is good. Though it's still high, it's actually still double the rate that actually applicable by central bank.
Do you see this as
need to actually do more?
Do you see this as a push for CFC driving market share over margins?
I think so, and I think what CFC has done will actually be an indication to what other banks are going to go, and we're watching to see what KCB will do, we're watching to see what other listed banks like NIC, Barclays is actually going to be. But I think the benchmark has been set by CFC at the end of the day.
So Safaricom is strengthening almost 3% today, just over 7 shillings. 7.10 is what you'll pay for the stock tomorrow morning. What did you make of the numbers that came through today? Because certainly still solid earnings. I mean, pre-tax profit up almost 50% for the period.
First, I must say the strategy that has been implemented by the company has actually worked out in terms of ensuring that all the diverse products and services have actually gained a lot. And secondly, we've been able to see that in terms of just being able to change direction of of how the company is going, it's actually been very positive. The results have actually been very impressive, and especially given that it's been a lot of stiff competition. The government has been on the case about taxing a couple of the products. The numbers coming out are pretty impressive, and actually in the corporate industry, the Safaricom made a lot of history today. But also, it says that the telco industry is still very young. There are a lot of opportunities to be made, especially if the company is actually going to be very innovative. And we're seeing that M-Pesa being one of the key earners for the company is actually going to lead the way, especially in terms of coming up with more refined products that are actually based on the M-Pesa. So this quarter is actually looking forward, and it's a leap for the other companies to actually see what they can be able to do, because it's like Safaricom is barely scratching the surface in terms of innovation, in terms of going forward, and the fact that M-Pesa is actually getting and deepening financial products is a way forward to go.
And just lastly, before we end off, Uchumi coming through and naming the advisors ahead of that cross-listing. It's also, of course, going to be raising capital as a result of that, and got a big expansion drive in the East African region. So talk to us about your views on Uchumi right now, and do you see it ultimately eating into the market share of Nakumatt?
I believe Uchumi has come a long way. I believe that the share price at the market is very stable. I believe the core fundamental factors are actually very stable, and the current CEO has actually done a lot. And that's why I think they're changing strategy from using the retained earnings so that they can be able to expand further. I mean, they want to start paying out dividends. They want to give value to their loyal stakeholders and shareholders who actually stood by them. And I believe the more Nakumatt delays into coming to the market, Uchumi is actually going to go ahead, because they have branches across East Africa. But I think for them to cross-list and also look at the rights issue, will be able to deepen their presence in the region, endear themselves to the stakeholders and the customers, and be able to raise between 1.5 to 2 billion in terms of being able to expand and actually make strong case to why they need to be the leading supermarket retail. And I believe the brand has actually come back to what it used to be, and the share price has actually gone up by more than 30% in the last 6 months. Yeah. So it's going to be hard for Nakumatt to actually catch up if they plan to do an IPO, because they've been dilly-dallying a lot.